Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hello, Felix.
Hey, Marco. How you doing?
Great. How are you?
Good. I hear you loud and clear.
Yes, cool. All right. Glad we got that fixed. So this morning you sent me a great article.
I did. I thought this is an incredible read. I think everybody should read this article.
By myself, I would have never stumbled upon it. I mean, I would have, but I wouldn't have read it because it says "Waiting for the Last Dance," and I was like, "Okay, that sounds interesting. What's it about?" And then you tell me you got to read it, before the episode. And
sure, we sent it out to members, right? We sent it out to members, so they have the article. But let's talk about it a little bit. We can get to the UOA after this. There's a lot of just a quick blurb on the UOA. There is a lot of moving around, positioning, moving around. Some people look like they're selling out of positions. The event happened. This election happened. It was, I guess, not expected because the betting lines were having the Republicans at least hold the Senate, but it didn't turn out that way. The Democrats look like right now that they get to run everything. So they run the table on the presidency, the House, and the Senate. What does that mean? I think people are putting their money, down on different positions, taking some positions down. There's a lot of confusion. I think while looking at UOA, it might look like there's not much there, but we'll find a little pockets. I have seen. You told me just earlier that you did see something, so I'm excited to see what you've seen as well. But this article is, I think it's invaluable, and how I stumble upon these things. One, I subscribe and I look at a lot of different things, a lot of different people that I wait for their quarterly. I'll look at Bill Ackman's statements. I'll look at Warren Buffett's statements. I will look at Jeremy Grantham's statements from GMO. I also subscribe on YouTube to, and I think everybody should have subscribed to the Goldman Sachs podcast or YouTube channel. I subscribe to the Morgan Stanley channel. They are putting out some great information. They are interviewing titans in the industry. They're interviewing CEOs of different industries. They're interviewing the bankers of industries. Like, what better person to hear from than 10, 15 years ago? I could never hear or listen to, the top investment banker at Goldman Sachs and what they're thinking right at this moment. And I think you can find a lot of tidbits and pieces of information that might be valuable in the future when you listen to the top investment banker and what they're excited about, where they're thinking there's opportunity. Remember, the top investment banker in the energy sector or the technology sector at Goldman Sachs is listening and pitching and strategizing with the top firms in the world. So by osmosis, they are thinking like the technology people. So you get an inside scoop by listening to them. I think Goldman Sachs and Morgan Stanley do a tremendous job in putting out great content and allowing access that people never had before. It's interviews with the CEOs of businesses and titans in the business and so on. So those, I do a lot of that, and I do a lot of that, 5-minute watching of YouTube's 10 minutes, sometimes a 20-minute interview. And they're coming at you. I think it's 60 minutes. I think it's called 60 seconds a day from Morgan Stanley. So get on LinkedIn, subscribe. I think it's well worth it. But this article in particular is great because this investor, Jeremy Grantham, he's great. He also has historically been very, very good at calling the bubbles and calling the top. Not that I think people can say that to some extent this feels like a bubble, this looks like a bubble, but he's done it historically over many different bubbles and has caught it pretty well. Although,
such as,
so he did what he's named them, but the Asian crisis, the NASDAQ bubble, the housing bubble, and now he's basically said we're at the tail end here of what is a massive asset bubble. And I think it's a tremendous read. So, I mean, if you have any questions, you let me know. But this is, he's talking about the 2008 bubble. He's talking about the, what he was thinking about. But more, I think what you get more out of it is the psychology, right? Is the psychology. He's basically talking about, how these things work, right? And it's almost, I say it in pictures. I subscribe to the thinking. I say it in pictures, the mountain, right? The left side of the mountain as it's going higher, and the right side of the mountain. And the left side of the mountain is really this psychological game. And as you're going up this left side of the mountain, and we are going up this left side of the mountain here, nobody knows where the top is going to be, and nobody knows when it's going to turn. And he even says it there. It's impossible. It's impossible to know the date, the timing. However, he can feel when it's close. Now, it's interesting. He said in 1999, right before I thought it was interesting because at Bank of America and when I worked at Swiss Bank O'Connor, we used to deal with GMO. So we knew what was going on in GMO, and GMO was saying, this is too toppy in 1999, in the Japan. Oh, he talks about the Japan in the 90s. That's the other one. It was getting too toppy in Japan. And what he's looking at is fundamental analysis. So he's looking at 45 times earnings in Japan. Well, Japan goes from 45 times earnings to 65 times earnings. So that's another 50% move in the market that he misses. And during that time when you miss, as you have to sit down as a hedge fund manager, when you're missing the bull market, and it's going, clients are not happy,
right? Yeah.
Right? You have customers. Everybody thinks, I want to be a hedge fund manager. And I say, are you good in sales? And I'm like, what does sales have to do with it? Well, you're constantly selling because you have clients. You have clients that are demanding returns.
Right. Just like you were an expert trader, but you also had to be a great salesman.
You have to be a great salesman to actually sell either the person that's asking you for orders, whether you want to do the order or not, sell them on price. I can't do this, I can do this. And it's constant. Wall Street is, one of the best skills I try to teach my kids is to be a good communicator, good presenter, and a good salesperson. And ultimately that will serve you well in the next phase of the world. But this guy, he's very, very smart, very good track record, tops in the game. And he's talking about this last phase. He's waiting for the last dance. And he was early in 1999 and missed. I remember they were sweating at GMO because they have billions of assets. And when you're wrong, billions of assets, which is how you make your money on management fees. And in this case, mostly on the management fees. So they're just trying to grow assets. If you're not making money, people, they're screaming at you. They're angry at you. He's saying I'm vilified for, not, being involved. And he says it takes great heart to actually be a little bit bearish when the market is going nuts. One other thing he says, which I think is great, is the worst feeling is to see your neighbors. I got to say it the way he says it. The worst feeling is to get your neighbors, your neighbors to make money while you're not making money. That's the worst feeling. Do you see it? Do you see it?
Yeah. As I like to say, there's nothing more supremely irritating than watching.
And so that causes the next person to get in, and the next person causes the next person, and before you know it, this thing starts going nuts. He talked about IPOs and how many IPOs were in 1999, 2000. I think it was like 480. 480 today. Okay, in 2000 it was like 400, maybe
406.
406. Okay, so we're already bypassed that. But the other thing, there are 150 non-micro cap companies, that is with market cap of over 250, that have more than tripled in the year. Tripled. So there's 150 of these that have tripled. So people are gravitating to these small little stocks and buying them, and they're going up because the next person is buying them and it's going up. And I can tell you that when you think about that stat, I go back to 1999 and I remembered, okay, the cab driver on the way to work, he's telling me he just made 10 grand, yesterday, and he's getting ready to buy this company because they just announced that they're starting a website. And I was like, okay, and he said, yeah, the whole internet, this is going to be the biggest thing ever. And, it might be, but ultimately the NASDAQ dropped by over 80%, and the issue is that the last 5 months, the market went up, the NASDAQ went up probably half of that. So it went up, it's a moonshot, and it knocks out every single bear that's possible. Any person, it's such a hard psychological thing to be short when the market is just going up. The market's been going up in 2 years. It's up probably 60%. So how, you even mentioned short, and people are saying you're nuts. What are you talking about? You live in, this is different. We are, clean energy. This is, we got technology, we got AI, everything is different. And this is the new technology. But that's the same. You could just take that sentence and say, go to 1999. That was the same thing. You can go to 2008 and say, yeah, houses are always going to go up. It's the American dream. And the prices, of course, they're going to go up because people are going to continuously buy housing. Okay. And the market and the Fed is supporting us. The Fed's been supporting us, was supporting us in 2008, 2009. That didn't stop the market from going down 60%. And they had to do the moonshot, which was like, all right, we're going to get long we're going to buy everything. We're going to buy every mortgage-backed security. We can't let everything fail. We're at a situation where we've created Frankenstein essentially, and Frankenstein needs money, and he's angry if he doesn't get it. And that is part of the problem. When it ends, I have no idea, but I will keep saying this until, it actually happens. But, the other side of the mountain for some of these stocks is already here, and you got to be careful. You just got to start noticing those signals. He said, which is great. What he said was, the worst, usually the tops of some of these big bubbles is not anything. It's not like one trigger event. Like if somebody asked me what caused in 1999 for the NASDAQ to start turning, I told you the weekend that it started, and I can't point to anything except that I can tell you that everyone in the room was long, more money than we all ever had. It was the longest. It was the most money everybody had on the table on that Friday. And that Monday, we were down significantly in one shot. And there was nothing, it was nothing like really over the weekend. There was one little comment about maybe interest rates going up and the dynamic change. And then the next thing you know, it was the floodgates out the door. It's interesting that he says that there's usually not one of these one event. Okay, that's very, very important. And then he says that he thought that perhaps it might happen in June, the summertime, because we will have enough vaccines out there. It'll be this buy the rumor, sell the news, where finally we got everything and the vaccine is going to cure everything, and that's a positive. And so now everything should be bullish, but in fact, everything was bullish in anticipation of that event. And when you hit that event, that's when people realize, okay, what's the next thing we're going to look at? Oh, there's 5 million people on a food line that can't afford their food, which, by the way, the market's probably up because everybody's going to get free money here, $2,000. But I think, again, they throw out these big headline numbers of $1 trillion. But the reality is, what's the reality? In the United States, how far does $2,000 get you? People backed up $2,000 for 8 months. And in fact, it's not like we're eating for family of 10 here. My food bill is $1,000, and I don't even know what we buy. It's just everything costs $1.50 more. Something's 80 cents more. A cereal box that I used to buy for $2.50. I haven't gone shopping in 25 years. So, I buy a cereal box, and and then my wife comes home with the receipt, and I'm like, $6.50 for Frosted Flakes. Like, what happened to the $2 box of Frosted Flakes? We say. Things have changed, so inflation is there in certain things, and for most people in the United States, $2,000 doesn't. First of all, it doesn't pay the rent or the mortgage for 1 month. It doesn't pay for food for more than 2 months. So what is $2,000 going to do? But the market likes it because you know what? Marijuana, gambling, and shopping, that's probably where the $2,000 is going to go. And you know what? There's going to be more spray painted garage doors that says we want our rent canceled. We want our mortgage canceled, because that's where we're going. And so I don't know. I just think this is a must read. It doesn't matter if you're bullish, bearish. It does not matter. You should read this, because if you're bearish, you should be concerned that what he's saying is that the end is almost impossible to catch. And man, you better hold on to your seats, because you're going to be taken for a ride and a half, because the end is not this, oh, today's the end and we're going to start going. And you're right. The end is when it zooms up as fast as it can go over a period of maybe 3 weeks, and then it's, you know, straight down. And you can't believe that that's the moment, because psychologically you just lost for, you know, a year and a half chasing this thing all the way up, and then it just zoomed up and come down. So this is bearish or bullish. It's a must read. And it's historical. It talks about what has happened. He talks about how things haven't changed, how it's always a story, which is why I always tell you, be careful that these things are good to play, but many of these stocks that we're seeing, they're stories. That's all it is. And like I told you yesterday, a story simply needs someone telling it in a way that's simple to understand, and not only someone telling you that it's simple to understand, but simple enough that that person can tell the next person, right?
Just like Bitcoin, right?
I was going to say 4 years ago, go tell the next person, let me explain Bitcoin to you. And then you go tell it to that person.
Right.
Well, you explain Bitcoin, you spend 20 minutes showing the blockchain and how this new technology is going to work. And then that person goes to try to tell the next person, and it's completely lost. It's just this new technology and you got to get involved. Okay. You're going to catch some people to buy Bitcoin in that phase. Now, here's a simpler story. Hey, take a look at my app. You see this app? Look, I have 100 Bitcoins, and I'm going to take, 0.1 of those Bitcoins, and I'm going to now buy a television, and it's going to be at my house tomorrow. You see? And the person goes, that's it. So it's like money. See, yeah, remember I told you 3 years ago, it's just like money. Now, look, on PayPal, it accepts, and I can just go, here, what do you want? You want something? I get a subscription for you. Here, go, what's your address? There you go. It's done. So now someone says, hey, that's a story. Now someone goes to the next person and says, hey, it's just like money. What do you mean? Yeah, you can just go on your phone and just buy it just like you have dollars in the bank. That's now a much easier story. You're going to attract everybody to come into Bitcoin. And now you're seeing Bitcoin going up. The other thing about Bitcoin is that there's something going on. And I will never say I know anything about anything, but I'm a probability person. And there's something going on that's a little fishy. The first JP Morgan, Jamie Dimon is saying that Bitcoin's a fraud. Now their analyst is saying it's going to 146,000. It's a fraud at 20. It goes down. I would bet if you looked at JP Morgan, they're long an enormous amount of Bitcoin. And now they're telling you it's going to 146. There's this 1% of me that says something is up. Something is wrong with what is happening here. And I'm trying to follow the money, because at the end of the day, that's all that really matters. Where's the money going? And if the money is now going to Bitcoin, okay, maybe is 1%, and I'm not saying this is going to happen, I'm saying 1%, is this the end game? Is the end game the billionaires have all the money? They go to buy Bitcoin. They first they miss it, and now they tell everybody that it's a disaster. This is not something you should own. And then they go buy it, and then they say, now we actually have to change policy. Okay, so we're going to vote in. We're going to get, there's more money given by billionaires in this election than any election ever. So we're going to change policy. We're going to make sure that policy says we can give free money, make sure we prop up this stocks, because I got a ticket and it's to Australia, and 40 billionaires have just bought the island of Australia, or whatever island they want to buy, and that's where we're going. And I need this market up to sell it, to get my money into Bitcoin, so that the government can't tax or take away my billions and billions and billions of dollars. That's 1% thinking. I have that in the back of my mind going, is this a fix? Is there something going on? Is this a complete con? Is the pieces being shuffled here, and now they know the game's over, but they have to have the market at the highest point possible to get out of this game and take the money? I don't know, but that's how my mind thinks. 1%. Maybe it's climbing a little bit more, but I don't know what the answer is, and I don't think anybody knows. I think there's the good news is that most of me wants to believe that the government, the United States government, knows what they're doing, knows the actual problems, and they're trying to fix it. Many times it doesn't feel that way from what you're seeing happen each day. It does not feel that way. The infighting, the fighting, people can't eat, and they're worried about, whether or not somebody gets $600 or $2,000. And then they're going to give, by the way, they open up the buyback process for all the banks, right? Because that's the other problem, right? Policy. They allow, the interest rates are so low that who the biggest buyer of stocks was in the last 10 years? The companies, their own companies were buying their own stock. They are the biggest buyer of stock over the last 10 years. Trillions of dollars. Now, where'd they get the money? Oh, they just borrowed it. They just borrowed it. They borrowed the money from the government, and then they took that money, paid very little interest, and then they just bought their stocks. And by the way, when their stocks go up, You know what these contracts read for a CEO? If my stock goes, I come in as a CEO, you're going to pay me $3 million, $5 million. Fine, that's fine, okay. But if my stock goes up, and I'm going to get all the stock, and then if my stock goes up, I'm not only going to make money on the stock that I get, but I'm also going to get a bonus of 20 million if it goes up 40%. And if it goes up 100%, I'm going to get $100 million because I'm such a good CEO. So it's called financial engineering. They're just basically borrowing from, Mary to give it to John. And that's it. That's really what's happening. So, things like that need to change in order to fix what we're doing. It needs to change. Otherwise, people are getting angrier and angrier and angrier. And ultimately, you start getting real, again, 50-50, whether, the whole rioting over the last 3 months was either bought and paid for to actually support, because it just stopped, right? The minute, it goes literally from like, they're burning everything down. They hate every statue. Everybody's got to I haven't heard of a riot on the front page of news in a long time, so that just stopped. And then it went to something different. So what's going to happen though, at some point, there really is going to be a riot. It's not going to be a manufactured riot. There really is going to be a riot. There is going to be people that are going to be pissed off and say, it's everybody who has money, how did you get that money? Just because you were CEO, you bought your own stock and you did this financial engineering? I don't know. All I'm saying to you is that, man, we are heading into a dangerous spot where, again, it's that 1% where the people within the United States are getting angrier and angrier. Win or lose, I don't care about the election. I'm just talking in general. They can't eat. They're getting angrier and angrier and angrier, and the market's going straight up. And there's this little product called Bitcoin that is now worth, there's so many billions of dollars in this bucket called Bitcoin that a lot of billionaires have shifted their money into Bitcoin, okay, have made more billions, and they got the helicopter ready to fly away to this island or wherever they're going. I don't know. Again, 1%. And I know nothing about nothing, but I feel I pride myself in not getting fooled. I don't like getting fooled. That's UOA is about getting fooled. I don't like it when I miss. I like playing a game. I'm a gamesman, and when I feel like I'm getting taken for a ride here, it's starting to feel like that wait, where are the billionaires going? They're moving from New York, then down to, avoid taxes in Texas and going to Florida. What's the next stop? Australia? Like, what's really happening here? I don't know. So that's my rant for, 20 minutes on this GMO, but it is an absolute must read. You will learn more about the stock market in that one letter than, all the news that's coming out of, CNBC and all those other things that everybody looks at, and even the newspaper. So this is a real guy. He is a very successful investor. He has a history of calling asset bubbles, and he talks about the psychology, which we spend a lot of time talking about here with the, in a very myopic way on unusual options activity. He's looking at it in a broad sense, saying this is what's happening. So it's very important. It's very important. I don't care if you're bullish and you disagree with him. That's fine. I'm telling you, he's one of the best that has done it for a very long time, and he sees different signals here, and you should absolutely 100% put time and effort into reading that and understanding it. And if you don't understand anything, just ask questions, because there's so much in there, so much from experience, from a lot of different things. There's so much in there. So anyway, now we can look at other things. Let's talk about what's up.
All right. Yeah, definitely.
What's up today? They like marijuana stocks, right? They like the marijuana stocks are doing well. You
want to share your screen?
Sure. Let's take a look at what we got here.
Yeah, it's real interesting. It's I've seen it being kind of dry today, and
so yeah, the board is pretty much. Let's see here. The board is a little light. So on something like today, usually we're pressing IV up, right? And yes, one thing that I would look at is on a day like today, the VXX, the VIX is down. Okay, so the VIX. With the VIX is the VIX on the implied volatility, is the implied volatility is a look at the implied volatility of the S&P 500. The S&P 500 is made up of 500 stocks, so it's an accumulation of all the implied volatilities of all those stocks into the S&P 500. That's how you should sort of look at it, just like price, implied volatility. And so when the VIX is down, then it's likely that most stocks in the United States should be down. The volatility should be down. Now, why is the VIX down? It should be down because the event happened. The event was this Georgia election. Regardless of which way it went, people were pricing these options high because the stock could have, suppose that people were thinking if the Democrats actually won, it could have went down to 345, 340, and it still might do that. It just might go to 385 first and then come down. But the event, which was these elections, to some extent has passed. We're walking into earnings season right now. So that's the next thing. But, that's not going to keep the VIX, from, coming off a little bit.
Okay. Can you share it?
Share which one? Can
the screen.
Can you see my screen? Okay.
No.
I'm sorry. Let me yeah.
So the VIX is down, but the market keeps going up, right? So
So I'm looking. Can you see my screen now? Yes or no? Yes.
Yep.
All right. So I'm looking at here. I mean, this is a longer. The VXX actually trends lower. So let's just look at 3 months just to get a clip. So, going into the elections, this thing is down 6% today. So we'll just look at that number, 6%. So with the VIX down 6%, all stocks, especially the big cap stocks, should probably be off a little bit. So if you see today, you're going to see a lot in the UOA, a lot of this IV down. It should be down because people are pairing up on their positions. They're long calls, the stocks move up. They start, hitting the stocks a little bit. And implied volatility comes down when people are selling out of their options. So
is the VXX something we should definitely be taking a look at when doing our analysis and going to the UOA, especially if we see all that,
I would say it's not necessary. I would say to understand that in front of a big event, that the market will have this VX, will have this implied volatility higher because it's expecting the possibility of some move. After the event, then the VIX and implied volatility in general contracts. That doesn't mean you go in there and every time the VIX is high, you sell it, because if it did drop if it did drop from 360 or 370 to 345 overnight, you would get destroyed in that trade. So, it's a different game playing the volatility. It's there for gauging it and sort of understanding what you're seeing, and then also seeing, okay, well, if a lot of these things are down because people are perhaps taking profits or just readjusting their position, and we look at IV up and there's not that many, just because General Motors is up only one, it's up. The IV is actually up here. It looks like, that's telling you that on a relative basis, that's up a lot. It's up more. It's up a lot, right? Because it should be down, like the VIX is down 5%. So this should be up more than it is. It's acting up here. What's going on with this thing here?
There it is.
Okay. So March. So we're looking here, and I'm looking at. I mean, we talked about General Motors. At some point, I think this is a much bigger winner than it is. We have been long in the past. It didn't trade well, but now it's sort of breaking out here a little bit to the upside. They're coming after calls here, which is interesting. It's probably a roll, I would guess, from what I see. So let's see at 12:30. Let's just look at the volume. 12:30, right around here. Looks like taking the ask. The IV was 43 to 45. 45 would be up, so that would be up on the day. And it looked like you see here IV up. It doesn't look like there was any spreads, but there was a lot of activity here in the front months. So just to see what's going on here, nothing. Looks like position adjusting here, and 2-day options we don't need to look at. Okay, so we have earnings coming up in a couple of weeks. So let's go look at this one again here. Let's look at this March option. 50 calls, 27,000, paying. I'm looking at this for the first time, so I'm just going to go easy here. Looks like around 12:30, so this is where we were. Volatility did go up, so that is a positive. That's telling me it's a buyer. Buying calls, and the stock actually rose 80 cents. You see it went from 42.80 to 43.60. That's 80 cents. The IV was also trading above, right around 45. So it looks like it was going up, which we see right here. And it was trading mainly on the offer. So this is telling me that, yes, this was a buyer. I thought it might be. I'd do a little bit more. Sometimes they don't catch the spread, but you know, it looks like it was a buyer, outright buyer under 50 calls, with the stock trading 43.5. The high on the stock is 47. Let me get a closer look. So I'll look at stock charts here just to bigger look. All right. So what I like about this is that this looks like it's broken, right? It looks like it's kind of broken here, sort of flat. You see that?
Yes. Yes.
Okay, so that's broken. What I also like is I like this day. You see this day right here, that red day? When you see this down and then this bullet up, this 1, 2, straight up like that, that's pretty bullish, because on this day there was good volume and the market is incredibly evil. The longer you play this game, the more you will see how evil it is. You know, you're waiting on GM, you're loving GM, you're loving it's awesome. You're thinking, you know, EV and it's a good company and blah 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 blah, and you bought it here, you didn't sell it here, and you're just okay, you're holding, and it's tiring you out, and a full month goes by, and then all of a sudden it's like bam, it goes down from 42 to 40, which is a 5% move in a day after looking strong. It looks like it's going lower, right? It does look like it's about to potentially break this sort of level where we were at here, right? And there was some good volume, and you're like, oh geez, this could actually hit 37, or it could actually go down, and I bought it around here and I want to get out, and psychologically this is really bad. And then it opens up at 40 again here. You might even sell some there, and then it rips, and then I mean, you know, this, if you are not sure that you want to be long General Motors, man, this is tough right here. This move right here. And then remember, it opens up down another 1.5% here, and then it just takes off. In 2 days, it's up almost 7%, 8%. Okay. So this looks interesting. I mean, it looks like, you know, the idea was that the stock, when we got long around here, that it can go into the 50s. And I still believe that it can. They're buying the 50s. So by buying the 50s, they're now signaling to me, Felix, that actually this stock can go up a lot more than 50. This could get to sort of, you know, it looks like they're buying this one, which is a little bit outside the range. But it's still interesting because I see that it's in a bubble type of industry. So any really good news can get this thing even moving that much more. So this one's interesting. You're looking at sort of like, let's just throw in 60-ish, right? 58. Okay, so can we get there, right? Can 58, let's call it 58.60. Let's go back weekly. Sorry, weekly. Let's go back. I always look back. Let's just look 5 years. I just want to see what 5 years look like. Yeah, I mean, look, you see this. It's interesting. I mean, just to give you a different perspective, forget this. Forget what just happened. You know, take a 5-year view and you see a stock that, you know, this was a big level. Whatever reason, 41 to call it 42 is a big level. 40 to 42. This is a big range. Okay, you see 1, 2, 3. This one tries to get up there. 4. It gets here. It actually blows through and comes back, but it's doing a little dance right here. Okay, and you know, there's a lot going on in this level for whatever reason. You know, that's charts work for whatever reason. And now we're above this. It looks, you know, I think you have a clear stop. It breaks down below 40 on volume, 38 on volume. You know, probably not good, you know, for a while at least, and you're just gonna have to wait. Or this thing has some legs, and you're talking about a move, powerful move from 28 to 47, 28 to 47, which is 20 points, 28 to 47, okay, 29 points. 29 plus 40 is how much? 69. Okay, so does it get to 69 by March? I don't know, but this thing is sort of signaling, you know, hey, this thing could get to 60, or we're thinking you get into high 50s, and that's why we're going to buy these, you know, these calls. So it looks good. I like any story where this is a real company. They have done cars for decades. They're one of the largest EV players. They don't get credit for being a big EV player. I mean, they're selling EV cars already, and they're selling as many as these other Chinese names are selling. It's just China's story is, you know, got its thing going, and momentum is in those names. And it's not like I unlike those either. I mean, that, you know, I could show you one that you look at these things, and to me, I don't. There's nothing wrong with these things either, to be honest. I'm looking at this and trying to say, I'd like to say these things are going to go down, but I'm not. That's not what I'm trying to do. I don't know. I'm simply looking at the flow is coming in the options around here. You see, by the way, I look at NIO, Lee, and XPEV all is the same, and this chart is starting to look a little bit interesting, in my opinion. It's held this level, this gap here. It's kind of moved up. Let's make it get out of this and make it a little bit shorter, so that we have so much white space there. So this is 0. Let's make it, where did it go back? August. So 5 months. Okay. So we have this, this was big volume here, 3-day volume right here. So
can you just inspect it as well?
Yeah.
Cool.
Oh, okay. Can you see this now?
Yeah. Just draw the line, and then I can see them.
Okay. So here, for whatever reason, it held 26.5 to the penny. I mean, this thing has gone from 14 to 48, and you're going to tell me that this thing stops like to the penny at the exact spot, the low here and the low here. This is, why, people look at tech analysis, and some people don't look at it at all. But I tell people, you got to at least look at it, right? You have to at least understand a little bit. I'm not saying make every decision based on it, but understand what's happening. But you have this sort of trade going on, and it's kind of breaking through the other side here, and it's above the 50-day moving average. And this is the 3066. It's holding above here. So, can it get down to, I think if it breaks 26.5, you have your range. It's 48. You're looking at 47 to 27. It's 20 points. It's 5 points off this level. So 15, 5, and now you start looking at options in here, which people are starting to play. It's not that they're cheap. I mean, they force you to pay up, but you're starting to look at, if it gets towards 47, 48, it likely tries to break this to go up on a bull market. That's a moonshot, I understand, but at the end of the day, we're in that type of market. And again, if you go back to GMO's article, he will tell you the last few months of a bull market, the last few, you can't imagine how these things move. What I like about what he says is it's a privilege to be a part of it, to be in this market. It is a privilege, because it happens few times in history. And, we're talking about the crash of 2009. You should think of it as a privilege, as a learning lesson, to be a market participant and being able to learn and understand. It scares you shitless. Sorry for the language,
right.
But it changes your psychology for a very, very long time. But it is to him, and even to me, it's a privilege to be involved in one of the greatest markets right now that there has ever been. The market valuations are at all-time highs. The amount of money that is floating around is at all-time highs. This is an incredible time to be an investor, but you have to also, have two eyes behind your head to watch what's going on, as well. So this is Lee again. I don't know anything. I know that it's in a bubble with NIO and XPEV. So, any one of those three. You were talking about NIO. What's NIO doing today?
Made a big, a little move up.
Little move for this stock. Little move is $5, but yeah, I mean, look, this is you have my inspect here, so the same thing. This is a constructive stock. It's not like, does very quickly, does this stock look like? This is how I judge sometimes. It's like one of the things that I'm looking at. What's the stock? Fubo.
Yeah.
Okay, so let's go back here, because I already have the chart. So Fubo. I want you to see this. Does that chart, NIO, look like this chart? Forget about the drop. Does it look like this chart? No. I mean, this right here is what Jeremy Grantham from GMO is talking about. This right here. You see that right there? That's impossible to be short through. It's impossible. You cannot. It does something to the mind. You cannot be short. And the shorts have lived through the pain. They're not trying to get super big in a short position. They're waiting for this part, and then they'll get big, and they just have to wait. But that's what he's talking about, the psychology. So when you look at NIO and say, okay, is NIO ready? Well, it made this move, okay, and you could have said, oh, this is the move, but this move, what it's done in the last month, is more constructive. It's actually probably more bullish to the story than, you know, what we see there. This, for the mountain, it's got to go like this, and it's got to go like that. This has done the opposite, right? This has gone, let's see, can I move that? This has gone up. Oh, sorry. Let's just do it this way. This has gone up, and then it just has stayed sideways. So it's building this. This is constructive. It would be, you know, somewhat bullish. You can't, you know, a person looking at this is not going to say just on a chart that this is a short. He might, because he has fundamental research, say, no, I want to short it. But just looking at this chart, it's constructive. And then when you look at the options flow, it's bullish. And these are the things, these are the signs that you have to put together. And then on top of that, you can go to the fundamentals. But I think what you're going to find in the fundamentals is that it's a story. It's hard to value. You have to see where it's going, is what everybody will tell you. And so, you know, you gotta balance. You gotta put a balance in there. Is you then gotta, you know, I think Marco, what I want to make sure that you understand is, let's think about it this way. I don't want you calling the market. No, I don't think many people could call the market, but I'm going to ask you this. If Lee options or NIO options, okay, if NIO options were a quarter for 1 month, where's NIO? Where's NIO here? 55. Say the 60 calls. The 60 calls, without even looking at them for 1 month, the 60 calls were, if I told you they were a quarter, would you buy those?
Yeah.
Yeah. You don't even have to think about it, right? It's like, Marco, I have a game of heads or tails. You know, if you win $2. If you lose $1. Would you play?
Right. Of course.
Well, you would play, but I bet you that you would probably think, is the quarter messed up? Like, can I use my quarter? Is probably the question you ask. But if somebody was going to give you those odds, you would play, because you know what? You know that over time you're going to win that game. You know, as long as you can keep playing, and you can keep playing, you know, the same odds. So what I want you to do is, when you see NIO and you see, wow, this could go here. I know that you don't know for a fact it's going to go there, but you should sort of have an idea of where it can go. And then when you look at the options, if it's a quarter, it's a no-brainer. You say, I know I want to buy that. That's easy. That's easy. At some point, you have to admit that at some point, if I said, if it's 35 cents, you'd say I'd still buy it. If it's $1, you'd probably say I'd still buy it. Now, if I said it was $4, you'd probably say, I don't know, that sounds a little bit, you know. So somewhere along the line, from a quarter to $4, your mind switched and said, it's doing this risk reward analysis. What I'm simply trying to do is help you refine that. You're never going to find a situation where it's a quarter or it's $10 or $20. It's where you're like, I'll definitely sell that, or I'll definitely buy that. Usually it's somewhere in the middle, and that's what I'm trying to make sure that you understand. Okay, that is the essence of what we are doing. We are taking pricing from options. We are taking a look at the charts, and we are trying to put it all together to make something, to make a risk reward analysis approach to what we're looking at. Is that fair?
Yeah, definitely. And okay, before we jump into some UOA, and I want to ask you a question. Can you pull up your thing again and go to the GM options chain?
GM, okay.
Back to GM. Yeah. Okay. So can you shade it back? Put it back shaded. All right. So we see that big buying 27,000 volume at $50, but it's shaded, right? And I'm looking at this opportunity. I'm thinking like, okay, it's shaded. Maybe the unshaded one could be a good solution as well.
Yeah.
Buying the 45.
The 45s. Yes.
I think that's like moving by one. Is that worth just to be in the unshaded area, or is it fine getting into the shaded area as well?
It's a great question. Okay. What I would say to you is this: when I'm looking at this, if this is Felix's idea or Marco's idea, then you have to determine what this target price is, right? What I'm saying to you is that you have to respect the fact that the guy who buys 27,000 options, or whatever the amount he bought, 25,000, that guy's not an idiot. That guy can easily say, well, I also like the 45s, or the 45s, you know, I think I can make more money in the 45s. He's doing the same thing we're doing when we're looking at a position. He knows where at least he thinks where he knows where the stock is going. And he's picking the 50 call option. I didn't tell him to pick that. I get to see that he picked that. Now I'm trying to help you and myself make sense of that one, because like you just said, he could have picked the 45s. And the 45s seem like they're probably pretty good, right? So if we stick in and we think, okay, we think 59, let's think 59 or 60, right? But my confidence level is a little bit lower, it still starts dragging me down towards the 45 level. So the point is that he has bought the 50s and probably thinks it's going from anywhere from, let's call it 56 to 60 is probably where his guess is, right? And we just, when we're looking at UOA, what we're doing is we're starting to rely on what they think. Why does he think 56 to 60? Like, how would it get there? That's my question. Not, I may not never know the answer, but he believes that it's going to go that high, right? Otherwise, he wouldn't pay $1.38 for that. He would actually, if he thought it was more likely to go to 53 or 54, then he'd probably pay for the 55s, because the 55s at 53, 54 would still give him, probably about 200%. Let's just do it. So it would be 50. Go ahead.
So if when we're looking at that, so I'm seeing the price is almost half for the 50s compared to 45s, right?
Yes.
And then would I be looking at this, what you just clicked on, based on the target price, for example, a 58, and looking at comparing the 50s and 45s and seeing which one gives me more return? Kind of just, playing with the numbers to feel it out if it's worth paying double the price.
Of course, if you're doing it, if Marco's doing it. But the reality is that Marco's not doing it. Some other guy, some big fish, some whale is actually buying the 50s. So it's different. When you're doing it, of course, you're going to look at this, 45s to 50s. You're going to look at your confidence level, your target stock price. You're going to come in here and sort of figure out, okay, I'm going to make this type of return here. If I go for this one, I'll make a little bit more with this target. So of course, that's when you're looking at it. But the reality is, I'm trying to focus on what this guy thought. I'm not trying to overthink it, because before today, you weren't even thinking about General Motors. Before 10 minutes ago, you saw this, and now you're thinking about General Motors.
Right.
Somebody's already thought about General Motors. They've decided the 50. So our job is not to sort of say he's right or wrong. Our job is to figure out what he's thinking. Why would he buy the 50 calls? Right? Why? That's the question. Why? And is this a stock that he's long and he's just getting out of stock and he just wants to buy 50 calls? General Motors, many people think it's a great value name. And so I don't think that he's bailing now. If somebody's long, think about someone, and we're talking about the guys like Jeremy Grantham, the big guys, right? They're long, they're long General Motors for, a guy like Einhorn was long. David Einhorn's a very, very smart guy. I think he bailed because he was long for a long time. And it wasn't paying him. General Motors would go up in 2017. Instead, what the market did here? Straight up. General Motors is bouncing around here and then eventually got killed down to 14. People left, people out. And so, for a long time, they haven't made money on General Motors. And these guys aren't dumb. These guys, they were talking about the EV in General Motors for 2 years. But you know what? It was like Rodney Dangerfield not getting any respect. It was like, nobody cared. Nobody cared. Everybody's like, oh, the EV, Tesla. But General Motors, in the meantime, was building huge factories, huge production in EV. This is what they're one of the largest in the world. No respect. So if you gave General Motors the respect that it deserves only on its EV, then the stock could be, Morgan Stanley has some of the parts at like $60 to $80 or something like that.
Wow.
Something crazy. It depends on where you value it. If you value it the way the market's valuing EV, it can be $100 stock. And so is that going to happen? Is there going to be a change? Is there going to be a change of thought? Meaning, I look for things like GM because exactly what I said earlier. Ultimately, value becomes important. You can have a story and it can work and you have all these others, but ultimately something like this is going to need real value and real factories and real sales. And that gets people excited. On top of that, it's part of a very interesting story. If they announce that they're going to separate their EV business with their regular corporate cars, regular, then the EV business gets to be separate, and then you have to value that business like you value Tesla, or that you value NIO and Lee and whatever, the 50 other stocks that are building cars. So that could be bullish, but then some people say, the negative to that is, and the reason why they probably haven't done it yet, is that when you separate General Motors and you now have cars that have EV and cars that don't have EV, it messes up the branding of who are you? And some of these cars are no longer going to be, which cars are going to be part of the legacy General Motors and which cars are going to not be, because, you got a General Motors, maybe a Cadillac, this Cadillacs, because they have an EV Cadillac now, do they take the whole Cadillac business and send it over to the EV? I don't know. That's how you separate it is an issue that they're struggling with. But if they do, whatever they call EV is got to be worth a lot of money, and it's not going to be worth $10 billion or 20 billion. It could be worth 100 billion. Why not? 20% of what Tesla is right now is probably 150 billion, which would mean $40 stock turns into two parts that are worth $150 stock. So I don't know. I don't know the answer, but someone's thinking that this could have a big move higher. And I don't think they're selling stock, because if they were selling stock here, it would be a shame if they actually rolled this for 2 years. And while the market, tripled in 5 years, this thing was only up a double. And now you're going to sell stock when it's about to fly. I don't believe that that's the case. I believe that whoever's buying that is juicing the returns for whatever reason. And if they do announce a split, I don't know. I know that there's problem. I know the bear side is what I said, but if they announce a split, that stock goes up probably $10 on the announcement, and then probably, another 15 over the next month. So it's something to look at, because when someone is signaling that high 50s, I'm paying attention, because this is a good reason to go back to what I keep saying. Know the stories, right? Just because you look at UOA and there's nothing today, or there's nothing tomorrow or the next day, if you go through the stories and you have them in your back of your mind and you're prepared, when you see them, you're able to actually say, wow, that's the signal I've been looking for. I've been looking for that signal. I told you about, Bristol Myers and ABBV. Let's take a look at those, because ABBV popped up on the board earlier today. So I did see some what is it? ABBV. Yeah, that's it. That's C. ABBV. And I see this pop up today. And, there's a lot of people talking about now. Where is the 105? So there's a lot of people talking about the two names, Bristol Myers and ABBV. I've been hearing seen a lot more articles. Obviously, Buffett's in the pharmaceuticals. This is interesting to me. Someone is now buying, it looks like to me that this was a buy earlier today. It looked like, even though the vol eventually came back down and it's down for the day with everything else, when they bought this, it did look like this was a buy. Okay. And part of me see here how the vol was 29, 28. It was the high vols of the day. So it looks to me like this was a buy, and they bought calls. The stock goes up. And there's news, and people are talking about how ABBV and Bristol Myers are relatively cheap stocks. They have high dividends, and this could be a safe stock in an environment. You want a safe stock in an environment where the market could go up and down 100 points. This seems like something that's interesting, and people might want to own. And if they're going to buy 5 million shares, why not buy some calls, make a little money back on the way up as we're getting along? That to me is interesting. It's February. It's after the earnings. That's interesting. I told you Bristol Myers yesterday. Same thing. They're these are on my radar to somehow pull the trigger at some point. But I'm looking to see. Bristol Myers hasn't really done much. In the last 3 months, just hanging in there. But again, you have, the background is Buffett. Also that this is a high dividend name. They have some positive things going there. Why isn't it up? I guess that's the question. But I'm starting to see call buyers pop up over the last, call it, week and a half. And I'm watching. I'm watching how it trades. I'm looking for that fake out lower. Maybe I don't really know exactly what's going to trigger me to say, yeah, this is one that I want to actually, go for. But, it's one that I'm watching. I really would like to see a little bit more bullish and maybe break out here and then say, okay, I'm going to miss the first point. But if this goes and they decide healthcare is the name they want, and maybe, it's a $70, $75 stock in, a few months, call it. Okay.
Cool. Yeah. Great.
What else? Any other questions?
Right. So not for me, but I wanted to ask people that are watching this, do you have any UA that you want us to take a look at? Any particular stocks you want us to, just go through the options chain, go through the chart. And if you've seen anything, please comment down below. We got a few minutes left. So the first one we get is probably going to be the first one we go through and analyze. So yeah, thank you, and thank you guys for everything. If you get a chance, please subscribe as well. We're just missing one subscriber for 1,200 subscribers, so that's going to be fun. And Felix, you can go ahead and go through the EOA a little bit, what you're seeing.
Sure.
What we've been seeing also is a lot of marijuana stuff, a lot of marijuana action, right?
Yeah, let's go through that. We can go through that one. I mean, today, you know, actually, this is a good lesson today to talk about. So last week we gave one of the stocks, we gave two of the stocks where it was a marijuana play, and marijuana stocks. It's all the same story, right? It's the same story. Everybody knows cannabis, and it was good. It deflated a little bit. Now these things are starting to turn around again, and to me, it's an easy story. If people are at home and, you know, governments need money and they need tax money, and they want to tax anything right now because they need the money. It makes sense that you're going to start hearing New York say, okay, we're going to make this legal like New Jersey did, and every other state in the Northeast should probably follow along. So these things are going to start picking up steam because the story is there, and maybe the government now with the Democrats in, maybe it's a lot easier to sort of pass certain laws. Remember who's not in these marijuana names. One of the players that's not in that will push these stocks and has stated that they're dying to get in is BlackRock. And BlackRock is not in any of these names, and partially because, you know, it's still federally not acceptable to, you know, there's still question marks about holding the stock that is federally, you know, that there's federal laws where it's illegal. And so if they pass somehow, or they pass this, I think it's called the safe law or the more law, where essentially it would signal there's a clause in one of these legislative things that are trying to be passed by certain Democrats. It would signal to the banks that it's okay to actually hold stocks where cannabis is a crime, marijuana is a federal crime, but, you know, a firm like BlackRock could own millions of shares, and they're going to be okay. There's nothing wrong with that, and that's a federal decision and needs to be placed in law. And BlackRock won't buy these stocks really until that's in place. They own like one or two medical marijuana, and I think they're comfortable with that. But the cannabis products, they don't own these stocks. And if that law is passed, then you better believe they're getting in. This is the one space that they haven't gotten in. So not saying that's going to happen overnight or when things have to pass, but, you know, that would be big news. I think winning the Senate today was a first step in sort of bringing people together to sort of help pass that legislation or help get that comfort zone. All you need is that comfort zone for the big guys to allow them to buy stock, hold it within the banks, and have everybody feel comfortable. Then BlackRock's going to buy millions of shares of whatever. And maybe this is the next area where they would, you know, get in, and obviously the bidding of marijuana.
Write it up.
Yeah, write it up. I mean, that's how these things work. So so you're seeing these stocks up. But what's interesting that I want to make sure, so there were two names that I picked, and one was CGC last week, and the other was VFF. So let's just take a look at them, because, you know, I think the lesson to be learned is, you know, and I get this question asked a lot, is sizing of the position. So we get long CGC probably somewhere around here, I think on that day. Trades lower for a couple of days, people probably averaging down here a little bit, and then starts coming back up and then explodes today. So it's working right now. I believe that it probably continues to work. But this one was the more interesting. So that's one. If you wanted to buy that one, you buy that one. You use, you know, what we're teaching is to try to keep every trade idea at the same dollar amount. And so when we look at VFF, you know, this thing trades crazy. So we get in this day. Okay, same day, so whatever day that is. But we get in this day, and it literally goes from opens here, trades down. So in the first half hour, it trades down to here. Okay, so if you're averaging again, the average price here was about, the price to buy was about $1, I believe $1.10, $1.20, and the average price all the way down is probably about 90 cents. Okay. It does trade. A one lot trades at 65 cents. And then literally in the next half hour, it goes from 65 cents all the way up to 210. Okay. The options. So it goes from $1.20 open. We're saying my price is the previous close was $1.10. And then it goes down to 65 cents. A one lot trades here. And then it goes to 210. And then there's, a lot trading between 190 and 2. So the point is that if you bought this, if you're using the same dollar amount, I would say that that's incorrect, because you shouldn't be buying, look, anywhere between 30 volatility and 80 volatility. I mean, 80 starting to get pushed that limit is, you can use the same dollar amount, but VFF is not the same type of creature as CGC. And so if your VFF at the time was like 200 volatility, 175 volatility, okay? 175 implied volatility is not the same animal as a CGC, which was 60 volatility at the time. CGC is a calm, conservative way that I like to play marijuana. But I know people want this crazy stocks that could actually go from 10 to 20. So I throw it out there saying, if you like this, if you want this, play this. What I forgot to say in that thing was, by the way, you don't have to buy a 3 lot of VFF. If you're buying 3 CGCs, which in this case would have been $1,000 or so, and so you have $1,000, which, and then I give you a VFF with an option of $1.10, you don't have to buy 9 options, okay? Because you're still going to have that $1,000 on each, but $1,000 is going to trade erratically, and the CGC is going to be a lot more sort of conservative way to play the game. What I'm trying to say is that in that scenario, the VFF, you should probably reduce the size of the trade. One, because you want to, and your stop, you can actually extend it possibly a little bit lower, or you can manage the when it goes, you're buying at 90, it goes up to 2, and you didn't buy 9, you bought 6, then you can sell 3, because it was also a 3.5 week option, 4 week option. You can sell 3, which is 50%, but you got to manage it, and you got to expect that your loss of 50% it's much easier to hit that loss with a 200 vol name, is what I'm saying. So you have to play this game. It's faster, but it also needs better management. It needs focus on the management side. You can't have it be the exact same dollar amount that every other trade is. This is 200 vol. I usually don't pick 200 vol names once every 5 names, but I will if I think, you know what, this does have the opportunity to just actually explode. And if somebody wants it, I'll give it to them. But you also have to manage that. It's highly, highly likely on a 200 vol name that if you're using 50% stop, you're not averaging in, you're using 50% stop, it's highly likely at some point you're going to get stopped. Even when it goes up 100%, then it goes down to 45 cents, you get stopped there. It's erratic. So you have to prepare yourself for that. So this one was, I would say this one was 100% winner on maybe a third or a half. And then on the other half, it would have been a stop out. It's plain and simple. Unless you got better than 90 cents and it trades down to 45 cents and you say, I'm going to hold for a minute because it was really down there for just a minute and then trades back up. These are the types of things that everyone has to learn, that when I throw out an option, usually I'll tell you, this is a crazy option, just be careful. That's really my signaling that you might want to reduce the size. You might want to reduce the size, and you might want to, consider your stop losses and how you are averaging in. There is no 90% of the time, the price I mark myself is not going to be the lowest price. Maybe 95. It will not be the lowest price. The problem is the one time that it is, you remember because it shoots up, and then I get hate mail that was the one that you missed. But 90% of the time, it's not going to be the right price. It doesn't matter. I still mark myself there, but I'm watching and I'm saying, you know what? I know people. I'm going to mark VFF at 0 because it should have been somewhere around 0 because you should have been an exit. And I saw volume basically coming out at that level. But I'm trying to be very conservative with these marks and trying to say, if it, just understand that, I'm leaving you to your plan, but please understand that it's very, very important. And you got to be a lot sharper when you're looking at anything 100 implied vol. Anything, because if I'm not right 95%, 95% of the time on that particular where I market each morning, it's like 99.9% that you will get a better price than the price I give when it's 200 vol. 99% chance. So it's patience is a virtue here. Even though the game is faster, that entry level is critical. Okay. And if you miss it, you miss it, but it's likely you're going to get a chance to buy it less than now. It may go up 100%, then go back down as it did. And if you did that and then you got in and now it's trading up to 12.10 and these options go from 50 cents, 40, 50 cents up to, they're probably close to, $1.75, $2, there's always a chance. Again, my role is to show you explosive situations where people are buying options, where they're trying to play this game of massive moves and big returns. But it gets tricky when it's anything over 100 vol. It's very, very tricky. Lower the positions, be more patient, be methodical. Try to look for these levels of entry in VFF. Look for these levels where, there's congestion here. Look, 972. This is why technicals are important, because, there's always this chance. This is the low here. That first move up, the first low was right here. Okay. After that, it does this dance around here for a while, and it's going around this. I call this in my language, it's a pivot line. I don't know. I'm not a chartist. I've just looked at a million charts, and I'm pretty good with patterns. So I might be onto something that people call it whatever they're going to call it. But I tend to look at the big move. I tend to look at the point, that point where it stops on that last move, and then what happens after it and how this level held. And then to the penny, that's where it dropped again at 975 to the penny. I'm not making this up. You see it right here. It's the first, you got a big move, that first sharp drop where then it comes back up. Okay, that's going to be my level where I'm starting to look. By the way, that was the level too, but once it starts breaking this level higher, then I just move this bar. See, this is the level. Okay, once it breaks that, then, okay, this becomes the level I'm watching. Then once it breaks this, and okay, this becomes the level I'm watching. And it was that level for a month, and you get, this dance around here, and then they hit that level and then shoots back up. So again, this is why technical analysis is important, and it plays a larger role when 200 vol names, 150. A much larger role. There's nothing to look at in fundamentals on a 200 vol name with Lee, XPav, this. I can name 50 of them. There is nothing to look at in fundamentals. Nothing you are going. There's one side of the table, and there's it's like the table in Beauty and the Beast, where it's like 50 feet long, and there's one person at one side, the other person at the other side. That's the value investor that says this is ridiculously expensive, and then the other person that's saying, hey man, how many people in China? You got 1.5 billion. What if everybody buys a car, and everybody buys a car and they buy it from NIO and Lee, and these things are going to be worth 200 billion. That's that guy. That guy's not going to change that guy's mind, and this guy's not going to change that guy's mind. It's two ends of the stick. There's really no middle ground. It's either you're on one side or the other, whichever you're playing. If you're on the value side, you're not even involved. If you're on that side, you got to be careful. That's the gist there. So so the marijuana stocks are doing great. I think they will continue to do great until something changes. But you have a lot of things coming up now with New York and a bunch of other things, which is a story. I'm glad we're playing options. These stocks could come down, but that's what I think there. I also think that banks are trading extraordinarily well. Damn, I've been looking at this since Tesla. When I'm looking at all these names since Tesla, especially Morgan Stanley and Goldman Sachs, because I know that they made a fortune. These guys have made a fortune on that Tesla trade, billions of dollars, and it's going to pop up in their earnings announcement. Now, is it already baked into the stock? Possibly. Possibly. These stocks have big moves. You can see Bank of America, the implied volatility is down, probably taking some profits. Wells Fargo, they're all up there. You got Goldman Sachs. Goldman Sachs is in there. JP Morgan, Citibank, JP Morgan. These are all in the top few trades. So the banks are trading big around here. They're extended. You look at any of the banks, they're extended. This one is interesting. FCX. We saw this trade. So this is an interesting trade where someone is actually getting out of the February, let's see, February 29th. I saw this spread. Someone's moving from February 29, they're moving those to the March. Where are they going? To the March 32s. Interesting. To me, that's interesting development. This is a stock that, here, take a look at this, because we talked about this yesterday. How do stocks move? They move up, down, up, down. It's a simple pattern, right? Up, down in general, up, down, up, down. So you're looking at this, up, it's down a little bit. Sometimes the down is small, down a little bit, moves up, It's down a little bit, moves up, and it's kind of now hovering here sideways. This usually, once it breaks here, goes up. I mean, it's a big move. People buying calls here after a move from 14 to 25. I was hoping to get a move to this. You know, you're waiting in this game, in this momentum game, can cost you, right? Because you just missed the whole thing. But you can't be long 15 of these things, because it actually does turn and drops here. This $4 move, even if it's just $4, will crush all of these out of the money options. So that's why it becomes, this game of momentum is super tricky. It's super tricky. You can't be long 15 of these things, because literally one bad day and all 15 get smushed. It's like impossible to make money. So on those, once they come down, so something to think about. But FCX is bid today. The miners and steel, letter X, MT bid. You have things like Caterpillar and Deere bid, right? Again, climbing the mountain. We're starting to get potentially maybe the upside of that mountain that could last 3 months. It could last 5 months. But if the Democrats are going to put together an infrastructure bill, then these things are going to start being bid.
And also another interesting one is SWBI was quite a surprise.
This one disgusts me. It actually disgusts me.
We played this one. It was
actually disgusts me. All right, so SWBI. I mean, I honestly, I don't get it. I don't. This one just.
If anybody knows anything, just let us know, please, in the comments.
This one just disgusts me. But basically, the story was that people buying guns. Everybody wants a gun. Everybody's buying guns. You can't buy a gun, okay? And you have the Second Amendment here in play, and the Democrats was trying to pass a law that basically said, okay, we're not going to take away the Second Amendment, but they were sneaky. They were trying to pass this law that basically said the manufacturers of guns will be held liable. So every time someone gets murdered or something happens, you go and they say, oh, well, it was a Smith & Wesson lawsuit against Smith & Wesson. You better believe that these manufacturers are not going to be trading at any, if they got lawsuits coming after them from every different angle after every murder, the company's not going to last. And so that was holding it down. But now the Democrats won. So I don't know, maybe it was just crap. Maybe it wasn't true. Maybe the lobbyists came in and said, hey, here's $250 million. Just make sure you don't actually do this. So I don't know what happened here, but let me tell you this. When we looked at it over here, it's a cheap stock. This is a very, very cheap stock. The problem is it's cheap for a reason, because if the Democrats win and they make it very difficult for the manufacturers, then it's going to be really cheap, because it's going to go to zero with all the manufacturing. The fact that the Democrats win and it goes up like this, it's sickening. It's sickening, because we were long January calls, and this thing is probably a $30 stock. If everything's okay, it's a $30 stock in my opinion. But I don't know if everything's okay. I can't even look at it. Take it off my screen.
All right,
it's off the table. What else? Any other ones?
There's some in the comments, but I say we leave those for tomorrow. And
okay,
we're already past time. But it was a great session, Felix. Thank you so much.
Awesome, man.
And I want to use this opportunity just to catch people and show them one quick thing if they're looking for, kind of a lot of what we talk about in a very tight fashion in 40-ish minutes. So let me show you, everybody. You just go to OptionsGeek.com, and here on the products, you have the free membership, which you know about, the Top 1% Club, but there's also 3 steps to profit. So this is our official landing page, but if you scroll down, there's a great 42-minute video, how the top 1% trade options and why the Greeks don't matter. You have the webinar index here. I encourage you to go check it out. Watch it when you have time. It's a great session. It's a great video. It's going to show you a lot about what Felix and I are talking about here. And if you're a beginner,
there's a transcript underneath.
There's a full transcript.
They want to read it, so you can just open them up and open one up to show. You can
do it at your own pace. I encourage everybody to watch it. I know when people watch it, they're mind blown. So that's that. And I want to say thank you to everybody. Thank you for subscribing. We just hit our 1,200 subscriber mark, and we're heading strong. So share, like, comment, subscribe, and we'll see you tomorrow.
Thank you.
Thanks, Felix. Bye.